Even though Robinhood stock dropped 20% this past week, our bullish trade in unusual options still expired on February 21st with a 500% profit. And some of our options contracts were closed earlier for more than 1000% profit right after the stock soared to a new high after reporting earnings recently. And so this video is not just about patting ourselves on the back. It's another real-time proof of our risk management strategy of locking in profits by trimming positions as they run up to new highs. Speaking of which, if you've been following our channel, you know how profitable our Robinhood trade has been ever since we started tracking unusual option activity about 6 months ago when Robinhood stock was trading at $17 per share. And so, if you missed our latest update about 3 months ago, on this day, October 30th, when Robinhood stock was trading at $28 per share, this was the video analysis we shared in which we showed our risk management strategy by rolling our options trade after making a 325% profit. We then analyzed more unusual trades to predict whether the stock would go up higher. And clearly, this analysis was correct because Robinhood stock is now trading at $51 per share. And so, if you want to learn more about how we did this, we'll put a link to this video up here. Don't forget to subscribe and hit the notification bell so you don't miss out on these very profitable opportunities. Now, how much more profit have we gained ever since our latest update? Well, if we traded the stock, you can see that it's gained another 82%. But since we traded options, we had the leverage to gain more. And so this is our options trade for the February 21 options at the 27 strike calls. And according to this profit loss graph, which already takes into account the cost of the trade, we have a profit of $2,477 per contract. And so to get the profit percentage, we need to divide by the initial cost of the trade. And so if we look back at this unusual trade that we analyzed on October 30th, you can see that it initially cost $495 per contract. We can also confirm this historical data here when Robinhood stock was trading at $28 per share, and these February 21 options at the 27 strike calls were being opened with a much higher volume in comparison to the open interest at $495 per contract. And so to calculate the profit percentage, we have $2,477 of profit divide by $495 of initial cost, and then multiply by 100 for a percentage, and we get a total of 500% profit. And so this is yet another real-time example of how we keep winning using data-driven analysis and trading strategies that track the trades of wealthy investors. Because understanding where money flows gives us deep insights into potential stock moves in the market. The rich often have better access to information, sometimes even leaked insider information, such as earnings reports, that help them make better financial decisions. It's no secret that the rich get richer when they consistently trade based on superior insights. And so, just like the legendary story of Robinhood, who took from the rich and gave to the poor, we, on the other hand, take insights from the rich and give that knowledge out to redistribute wealth and profits to the many subscribers who follow our channel and join our membership. And so, if you want to get access to more of these deep insights from the rich, then go to our website. We'll put a link to our website up here where you can see exactly when and which stocks wealthy investors are trading on Wall Street so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now, with that being said, it is worth pointing out that this successful trade in Robinhood stock also highlights the importance of a key investment principle, which is portfolio diversification. While some unusual trades may be losses, substantial winners like Robinhood can make a significant positive impact on our overall net profitability, balancing out other investments and enhancing our financial growth. For example, just one of these 500% profit winning trades can offset many losing trades. We could lose 4 trades in a row at 100% loss each, totaling 400% loss, and still be up positive by a 100% gain. Now, if you've been following our channel, you know that we do not lose that many times in a row. More like the opposite because we win a lot more trades. But the point is, even though many people focus on the win-loss ratio or how many winning trades versus losing trades, the real key lies in how much you can gain when you do win. A high win rate does not necessarily translate into higher overall profits if each winning trade yields only a small return. Instead, focusing on maximizing gains in winning trades can have a more significant impact on your bottom line, even if you have occasional losses. And that is why, instead of trading stocks, we primarily trade option strategies with a better risk-to-reward ratio to maximize profits and reduce losses by diversifying our portfolio with more of these unusual trades made by wealthy investors. And so if you want to get access to more of these unusual trades to diversify your portfolio or learn more options trading strategies to increase profits, then head over to our website. Now, with that being said, there's more to our winning strategy than just diversification. We do a lot of behind-the-scenes research to track the trades of wealthy investors when we analyze the data of unusual option activity. As an example, let's dive deeper into the data on our unusual trade in Robinhood. As you can see here on the option chain, for the February 21 options at the 27 strike calls, where our trade position is, POS stands for position, and the green color means a buy position, while a red color would mean a sell position. Notice how there is a volume of 52 contracts, which is much less in comparison to the open interest of 2,899 contracts. And so these 52 contracts being traded could be closing trades. In other words, it is possible to close out of 52 contracts if there are 2,899 contracts that are still open. And that is why we spend a lot of time tracking this data so we can make a more accurate conclusion about whether it is an opening or closing trade. Because this data is very important to figure out. If a wealthy investor is closing their trades, it could mean they're worried about that stock. So maybe it's not the right time for us to jump in. On the flip side, if a wealthy investor is opening trades, it could signal an opportunity for us to start a new trade. And so we always take this extra step to analyze the data at a deeper level because many other websites and scanners don't. They report all high volume unusual trades without filtering out closing trades, which leads to wrong results and losses for those following unusual option activity. And that is why we have more winning trades than other websites. But as we mentioned earlier, the real key to success is not just the number of winning trades, it's how much profit each winning trade can generate compared to any losses. On that note, how much profit did these call options give? You can see here how much they are worth now, between the bid price of $24.25 to the ask price of $25. Keep in mind that options are priced per share, so we need to multiply by 100 to get dollar amounts, because each options contract represents 100 shares of stock. And so after multiplying by 100, each contract of these call options costs between $2,425 to $2,500. And so the reason why our trade is so profitable is because our options are very deep in the money now. These 27 strike call options essentially give us the right to buy 100 shares of the stock at $27 per share, which is a total of $2,700. And so we could immediately sell all 100 shares back to the current market price of $51.60 per share now, for a total of $5,160, which would then give us a net profit of $2,460, which is between the current cost of these call options. And so the numbers add up correctly because these options expire now with full intrinsic value. If these options were not about to expire and still had more time left, then the calculations would be a bit more complicated because of other factors, like time decay, also known as theta in the options Greeks, which can be a major risk to trading options if you do not understand how to manage it. And that is why we manage our options trades just like we've been doing with our Robinhood trade, to minimize these risks while increasing our chances of profit. If you missed our latest video analysis on Robinhood stock when it was trading at $28 per share, we'll put a link here so you can see how we made a 500% profit. If you want to learn more about our trading strategies that give us an additional edge beyond simply picking the best stocks to beat the market, then go to our website. We'll also put a link here. As usual, please like, subscribe, and until next time, let's keep taking from the rich, or at least their trade ideas, and giving those profits back to everyday investors in our community. Take care and have a wonderful day.